Alright guys, welcome to today's video, and it's been a very lovely week. Last week was actually very lovely on the forex, or in the forex space rather, in the forex market. So today I'll be touching quickly a few of the trades I took last week, my thought processes, and my forecast for this new week. Without wasting much time, let's go to the first pair, which is AUDJPY, Australian dollar, Japanese yen. So first, what was the thought process that guided this trade? Very quickly, I was able to realize that AUDJPY has been buying. You can see the previous weeks, 1, 2, 3, 4, about 5 weeks. It's been a bullish market so far. All right, it's been a bullish market on the weekly time frame. So what does that tell me? That tells me every weekly candle should now seek its high, its previous weekly candle high, as the drawn liquidity. Now when I go to the daily time frame, I can visibly see a setup here, which was a fair value gap on the daily time frame. All right, that was a fair value gap. All right, now what do I do after seeing a fair value gap? I like to draw a Fibonacci. I throw a fib on it. Normally I like to put it here, but there was no difference between the middle candle and the first candle in this scenario, so I just measured out everything, which is the full range. This is the daily time frame. Now dropping down to the 4-hour time frame, we see that there is an order block, a 4-hour order block here that aligns with the 79% level and also the 70.4% level. But for more clarity, to be able to get that exact PD array that should cause the bounce, I can drop down to at least the 1-hour time frame, and that was it, this order block. But then most of you ask me, why did you draw out this rectangle? What is there? I believe when I dropped down to the 15-minute time frame, it was something that struck my eye, a signature. So we have this drop down, sweep, and then we have this impulsive move. This impulsive move on the 15-minute time frame left behind a fair value gap. Now that fair value gap would have a sensitive area. On the lower time frame, it is usually the first candle. All right, so this first candle right here was my sensitive area. I just had to refine all the way from the 4-hour, 1 hour, 15 minutes, and then I got this guy right here. And basically that was it. I could have easily just used this 1-hour candle, but then I just decided to refine it a little bit more, and that was basically it. If you want to trade it blindly, you can just draw out from the daily time frame here, right, if Fibonacci, and just take the 70% level or the 79% level without having to look for more confirmation, or for more signatures rather, not confirmations, signatures. All right, so that was that about that on Australian dollar, Japanese yen. That was about that. I'm still in the trade. It actually fell before the close of the week. It fell and then started bouncing back up. That I would leave this to run. I won't be looking for new entries on AUDJPY. I'll be leaving this to run. And moving on to BTC, which is the next pair. I'm not interested in taking anything new on BTC currently, because after this really nice sell, BTC reversed back into the weekly highs to sweep liquidity. This is the 4-hour time frame, right? And since then it has been consolidating. All right, it has been choppy, and because of that, I will not be looking to take anything new on GBPUSD until there's a breakout somewhere, and then I start looking for fair value gap setups. We remember I spoke about this sale on BTC. Yes, I spoke about this sale. It's in my other video. You can check it out and you see the thought process behind it. And that was the last thing. That's the last thing I've taken on BTC, nothing else. And currently I don't see anything for BTC except it wants to keep expanding lower, except it wants to keep going lower. And if that's gonna happen, what do we see? Currently on the daily time frame, this is the only PDRA that is holding price. This very voluminous bullish order block. Alright, so this is very big and it is very uncertain right now. The market on BTC is full of indecisiveness, indecision. So I'll be waiting to see a breakout somewhere. I'm ignoring BTC for a while and then move on to the DXY. DXY, which is the dollar index. Now, this is where advanced trading comes in. When you know how to correlate DXY with your other pairs, like DXY, GBPUSD, DXY, EURUSD, even DXY and USDJPY, alright? When you know how to correlate this space, buyers and narratives will not be a problem for you. So very quickly, what am I seeing on DXY for the week? When I go to the weekly time frame, alright, check the last 1, 2, 3, the last 3 weeks, right, has been bearish on GBPUSD, on DXY rather, sorry, on DXY. So what should I be expecting? Be expecting this week to sweep the previous week's low as it's drawn liquidity, and also we are close to an intermediate term low right here. We've been coming from an intermediate term high. We are close to this, so there's every reason why DXY should just keep selling, which means EURUSD should buy, GBPUSD should buy, but then again we'll touch them really quickly. So what do we have here? What do I already have situated here? On the daily time frame, there is a fair value gap setup right here, but I'm putting something into consideration. There's a breakaway gap. This right here, this third candle, having closed under the middle candle's low, to me is a breakaway gap. All right, so if price is going to continue selling, price can continue selling from tapping a sensitive area of the breakaway gap without having to entirely trade into this fair value gap or sweep the high of this third candle. Why? Because a breakaway gap, the psychology, the idea behind the breakaway gap, like I have said in recent times, is that the fair value gap that is attached to the breakaway gap should remain intact, should remain untraded too. So if that's the case, if price is going to keep this fair value gap intact, one of the things price can do is to take a premium level to sell. It's going to take a premium level of this third candle, find a lower time frame fair value gap to use, and then use it to sell off while ignoring this daily fair value gap here, right? So if I'll be expecting that to happen, if that ideology should hold, what am I looking at? Already available on the 4-hour time frame is this setup, right? Is this setup. Look at it. When you take the measurement of the third candle of the breakaway gap, we see the premium levels 61.8, 70.4 and 79.0. all right, these are the premium levels. And when I go to the 4-hour time frame, still putting the daily Fibonacci into consideration here, what do we see? We see available here another block that is unmitigated, which also aligns with the 70.4%. all right, it aligns therein. And if that's the case, I want to see price on DXY do a little bit of sweep, tap into here and continue falling. Very simple, like very simple, but you need to understand bias. You need to understand there are things that happen underneath, right? There's this line right here with this little arrow. It means something. One of these days I'll take our time to really break down my strategy and have people follow through. This is an average trend change indicator. All right, price should remain bullish. Price should remain bearish on DXY until price creates new fair value gaps above this line. So until price has created new bullish fair value gaps above this line, we are bearish on DXY. That is when the trend changes. Price can buy up and create fair value gaps, and you might think, okay, DXY dollar is now buying. You'll be surprised to see there'll be a sweep here that happens, and then price just falls back down immediately, creates new bearish fair value gaps and keeps on selling. Right. So that is how I identify a momentum shift, a trend change. I don't look at breakup structures and all that. There is a certain system that guides how I see volume, how I see order flow, and the change of momentum. So what I'm looking for to wrap DXY up is I want to see price come into here, this area, and fall back down, causing EURUSD to continue buying, GBPUSD to buy some more. And there are cases when price just ignores the breakaway gap and really goes in to tap into the fair value gap. These cases, what usually causes this? If price is coming from having swept a higher time frame PDRA that would cause a deep retracement, then a breakaway gap may fail. Take for instance now, we see something like this. Price sweeps into here. Now it has taken an intermediate term low. That is liquidity. It could use that liquidity. There could be some bullish pressure, buy into this fair value gap and then continue selling. Or it could use it to shift price. You never can tell, right? You never can tell. We just react to what the market does. We don't predict here. All right, we react and then we use our systems to guide our reaction. That's what we do here. So now we don't see price retracing from an opposing PDRA. I haven't tapped into an opposing PDRA. So that is more reason why I think this breakaway gap may hold. All right. If that don't happen, then I'll be looking into a tap of this fair value gap and then a reversal. So that's that on DXY. I'm looking for continuous bearishness on DXY. All right, GBPUSD. Good. On GBPUSD right now, I'd say sit out on GBPUSD. I am leaving this my entry here because I didn't expect this bullishness to continue right here, to continue immediately. I actually did not expect it. I was hoping it would maybe provide me some more pullback and then tap me in, but that didn't happen. However, I'll be leaving this GBPUSD buys, and the reason is because on the daily time frame right here, the daily time frame, this impulsive move right up here, it is void of fair value gaps. It is lacking fair value gaps, which makes this entire leg a liquidity leg for me. So price can just spontaneously fall very quickly, sweep this low and do some funny business in here and start buying back up. So on GBPUSD, I'll be waiting for price to make a deep retracement. If it doesn't make a deep retracement and it comes back down anyway to sweep these lows, let me take care of this so it doesn't hinder what I'm showing. So if price doesn't make a deep retracement into this area right here, I'll be looking for price to sweep these lows right here and create new bullish fair value gaps to the upside on the 4-hour time frame precisely before I'll be looking to engage on GBPUSD. I'm bullish on GBPUSD, but at least some pullback. We could be seeing that. We're also close to all-time to intermediate term highs over here, the ITH, you can see it. We are close to this at the 34716 level, and that's more reason for GBPUSD to keep buying. But the impulsiveness on GBPUSD right now is causing me to really want to focus on other pairs because it's just been buying and it has not really been giving me that deep retracement to trigger me in my setups. But it's been buying regardless. I'm not looking to chase GBPUSD or force anything on it. I'll focus on other people. Focus on other pairs. And that's that on GBPUSD. I'm waiting for buys, but I'm really waiting for it to do some retracement and create new setups. Right now, everything here on GBPUSD is what I am not going to involve myself into, and then skipped. Now EURUSD have me actually thinking. Yes, it has me thinking because right now I am seeing a pattern that I recognize very well. Look, we have two fair value gaps here. There is one right here on EURUSD, and then there's another right here. I've seen this very frequently, where the first fails and then the second works and price resumes in its direction. But I'll be giving EURUSD the benefit of the doubt. I'm going to take the first fair value gap. Now, reason is because next week is gonna be the third candle on EURUSD, right? On EURUSD, and if it's going to be an expansion, this will be protected. If EURUSD is going to leave behind a fair value gap, a weekly fair value gap, I don't want to see price trade into this level. All right, I don't want to see price coming to 16,820, but it's going to retrace a little bit. It's going to give a retracement, and if it's going to give that retracement, it's going to use something on the lower time frames. Now, if we see this on the weekly time frame, one bullish weekly candle, but then we are anticipating price to drop down, right, and then go back up. We want to see it ignore these levels so that at least be, it would be a tradable market. It would be a concrete leg, a valid leg, because a valid leg should have a fair value gap in it. So if EURUSD is going to create a valid leg, it should leave behind a bullish fair value gap on the weekly time frame. Now, if that's going to happen, we drop down to the daily time frame. If that's going to happen, what do we see here? Take this out. We see two fair value gaps on the daily time frame. When I mark this out, when I draw up my Fibonacci on this daily time frame, all right, using the entire range, we have using the entire range 1, 2, 3 of this Fibonacci. Now I'm working with this Fibonacci right here. That's what I'm working with. All right, let me take the key range and I take the middle candle to the third candle. What do we see? We see price, fail, take out this bullish fair value gap and drop into the sensitive areas of the second one. But for that to happen, that means on the higher time frame, which is the weekly time frame, our purpose for price leaving behind a bullish fair value gap has been defeated. All right, so I don't really expect price to come into this level. It could happen. Price can actually come back here and make this a self rebalance, a total rebalance of the entire candle, and then buy up very strongly, leaving behind a long wick. That can happen. But for a market, all right, to be valid, for a market to be, what am I going to call it? For it to have a tradable, for any market to be tradable, it needs to have a fair value gap. But for a market to be concrete, it needs to leave behind fair value gaps. That's what I'm trying to say. So I'm expecting this to hold. So in the event that this doesn't hold, I'll be waiting for price. I won't be taking this on limit. All right, I'll be waiting for price to fall into this daily fair value gap. In the event that this fails, the first one fails, waiting for price to fall into here and then create new 4-hour fair value gaps, new 4-hour fair value gaps to the upside before I'll be looking to take any buys on EURUSD. But currently, if I'm going to be working with this fair value gap, what do we have? Because I'm looking to take an actual buy from this fair value gap if price provides the retracement. What do we have? Okay, we have our, as you can see, we have our sensitive areas here, the 61.8, 70.4 and 79.0 levels. When we drop down to the 4-hour time frame, what do we see? We see an unmitigated order block right here. Let me check this out and take this out. This is the fair value gap from the daily time frame. I'm gonna take it out. So we see a setup, right? We see a bullish setup. This is the 4-hour time frame, a bullish fair value gap. Now you see, why you not measuring out this fair value gap, since that is how you trade? Once there is a fair value gap on a higher time frame, it defeats any fair value gap that is on the lower time frame. Now, I'll not be interested in measuring out this 4-hour fair value gap because there is also a fair value gap on the daily time frame. All right. So if that's the case, I'll be measuring out the daily time frame's fair value gap. That's going to be the actual concern, not the 4-hour time frame fair value gap. Then you can find whatever situation signature you want to find on the lower time frames for 1 hour, 2 hours, thereabout. So daily setup, daily time frame setup, fair value gap, and then I'll be dropping down to the 4-hour time frame to have what? To have this. You can see this fair value gap here present as well. We have taken the intermediate term high. This is taken, so this should go. Price is going to look to create a new intermediate term high. But for that to happen, we'll be looking at a very long time of bearish retracement on EURUSD. So now, on EURUSD, what buys am I looking for, and what is the idea that guides this entry? Like I said, daily fair value gap. You measure the Fibonacci, and you get the 61.8 sensitive levels. And when you drop down to get your signatures to the 1 hour time frame, what do I find here that aligns with the 70.40% level, which is the level I like to personally take? We find an untapped or an unmitigated fair value gap on the 1 hour time frame, right, which also aligns with the fair value area. We can see there's a fair value area here. I don't talk much about fair value areas, but it is inculcated in my system. I just don't talk about it enough, or I don't talk about it much because I have already simplified my system to be fair value gaps and Fibonacci's. But it's more than that. There's a lot of psychologies and a lot of knowledge that goes beyond it. It really goes deeper than that. So that's it. The 1 hour signature right there is the fair value gap that is available here in this setup. Now, to match that, there is London and New York session liquidity. The highs and lows are liquidity, but I don't talk about that. I don't talk about liquidity, but it is also inculcated. It is in the strategy, but I don't want to complicate things for my viewers or those that are starting to understand what I'm talking about, and then all of a sudden I'm talking about liquidity, I'm talking about time and price. No. Fair value gaps, Fibonacci's on the 4 hour time frame. If you know how to use them, you can be 50% profitable at least. But then when you add other knowledge and other confluence, then you can now be moving up to 70, 60%, 60% accuracy and profitability. So that's that. 1 hour time frame signature, 4 hour time frame order block, and that's my entry. So in the event that this fails, I'll be looking for price to sweep down and then create new bullish fair value gaps to the upside on EURUSD for me to take some buys again. So let's wait and see what price does. On US30 has been a lovely run. I won't be talking much about US30 here because it is an all-time high instrument, right? I trade all-time high instruments differently because I'm always looking for a reason to buy, even in times of deep retracement, right? I may be catching quick sales, but then I keep in my mind that this market can reverse at any time because like BTC, gold, and US30, these are all, they are all-time high instruments, so they are always looking for new all-time highs, reasons to buy. All right, so how did I catch this trade? It's still on, by the way. I'm looking to take the entire profit, or the entire take profit. Yes, I could even extend because I have a conviction that USDT is still going to buy some more. So how did we come about this trade? Like obviously we've seen that the last 1, 2, 3 candle, or the last 2 weeks has been bullish. So what should price do? Price should seek to take out the previous candle's high, the previous weekly candle high. So in that case, this previous candle high became my draw on liquidity. and we were also close to the all-time the intermediate term high. So this intermediate term high became the entire drawn liquidity. I'm going to take this out. Now, weekly time frame, we have established our buyers. We are bullish. We are looking to take out the previous week high. There is an intermediate term high close, and we should be looking to take out the intermediate term high. So now, when we go to the daily time frame, right? What do we see here? If I took this trade, very obviously, we saw price left behind a fair value gap right here, and that became my setup. When I take my Fibonacci, let me delete one of them. So when I take my Fibonacci, this is into the future. I want to break down how I cut this trade. When I take my Fibonacci on the daily time frame to the third candle, I actually did key range. Yes, I did the key range in this key range. I used the key range here and not the full range. So that's that. On the 4-hour time frame, very obviously we see that there is also a 4-hour fair value gap, which signifies that it is a valid setup. On the daily time frame, there is a fair value gap, signifies that it is a valid setup. And then on the 4-hour time frame, there is a fair value gap, also signifies that that it is a valid setup. But it is something I do. All right, after seeing my fair value gap, I want to see if there is any reason why price should retrace deeper than just using the fair value gap. If there's a reason, that reason is going to be evident or obvious on the 1-hour time frame. And going down to the 1-hour time frame, it is very, very evident that there is a 1-hour order block right here. All right, and so that was my entry, but I refined to the first candle. Let me take this out of the available fair value gap. As you can see, candle 1, candle 2, and candle 3. Let me zoom into this. On the lower time frames, when you are refining, never refine past the first candle of this fair value gap, because that's usually the most sensitive area. Right, when you're not going more lower and you're refining, you may miss the trade. So on the 30 minutes, this showed me a fair value gap, and the first candle formation of that fair value gap became my entry on USDT. 1-hour time frame showed me an order block, but with a fair value gap, and I also took, you see, it all aligns. The first candle was the entry. On the 30 minutes, first candle was the entry, and that was that about that. Until now, USDT is still buying. It fell before the week closed, but that's not a problem. I understand that it needs retracement, right? To be a healthy market, it should retrace, then create another impulse. So what will I be looking out for on USDT right now? On USDT, I will be looking at continuous buys. How will I want to engage on that? Already, we see that there is an available fair value gap formation right here on USDT. Good. And this intermediate term high has been taken, so price will be looking to institute another intermediate term high, which I'll be waiting for. So now that the fair value gap has been created, what do? Take my Fibonacci, the key range from the middle candle to the third candle, the full range from the first candle to the third candle, and then I drop down to my 4-hour time frame to see what aligns and how it makes sense. Oh, very quickly, you can see USDT right here. USDT has a fair value area that it could possibly retrace back into. There is also the sensitive areas of that fair value gap, which is the 70% level, 79 and 61.8. Alright, to look for any more signature I go back to the 1 hour time frame, and that's nice. I can see, let me take this out. I can see a 1 hour I can see a 1 hour untapped fair value gap right here. So yes, we could be having this. We could be having this. I'm gonna make it a PY. So we could be having this, right? We could be having this. What does the 2 hour have for me? Okay, the fair value area is the most obvious PDRE of support right now, but I'll be taking the 70% level. However, I'll be taking the 70% level. However, so yes, if I'll be looking for a re-entry on USDT, it will be here. This fair value area that aligns with my 70.40% level. I don't need to take the entire stop loss. I'll look to refine. So let's refine together. 1 hour, and then I am looking for very tricky. This one is very tricky due to the impulse, but we'll see. Okay, 1, 2, 3, 79% level. The highest point I can refine to is the 79% level. I'm not going to go lower than this, but I'll be taking the 70.4% level. That's 0.704. But I won't be taking the entire stop loss or the entire range as stop loss, because if price needs to buy from these areas, it just needs to tap into this price point, and in the next few hours or minutes resume in its buys or in its bullishness, right? So what area is price most likely not supposed to return back to? This is mitigated, and this is mitigated. This is not mitigated on the 30 minutes time frame, and that is how low I want to go. So that puts us in place of this. Alright, we could see price tap into here, but not categorically want to go lower than it. So yes, this would be my refinement. This would be my refinement on USDT, and this is the trade. After this, I'll be looking to get out on the minus 27 or the minus 0.68. Alright, and that's that about that. On gold, yeah, gold, but I won't be taking gold this week because I already have a lot of setups coming up. I would not like gold to be one of them, but I'll quickly touch gold to see what we have here. So very quickly, what we have on gold is the new formation of this bullish fair value gap. Is a new formation of this, and then what do we see? I'll make it a bag. Now this is a breakaway gap, but it's coming from this bearish order block, which caused this huge retracement, this huge reversal. Because of that, I'm not interested in taking the breakaway gap, because price have every reason to want to retrace deeper and even fail on some buys until there is new bullish pressure. So currently, what do I see? I'm not interested in taking this breakaway gap, so I'm using the fair value gap. What do we see? We see the fair value gap right here on the daily time frame. You measure it out from the middle candle to the third candle, all right? And when we drop down to the 4-hour time frame, what do we get? When we drop down to the 4-hour time frame, very quickly we see this. This has already happened. So this is one of the reasons why I said I will not be taking gold, because there's a lot of contradicting setups right here. So I believe in my limit here because there's something I'm waiting for in that area. I'll be showing it very quickly. This has already been used. This 4-hour fair value gap has already been used. As you can see, price swept everything, tapped into this fair value gap even. All right, tap into this fair value gap as well, and it's rejecting. So price can either create new 4-hour fair value gap. I wasn't expecting this gold bullishness to happen. I watched Akinda Mola, which is Karma, yes, Karma effect. I watched the story on Instagram, and he was mentioning an unexpected 600 pips on gold. Yes, it was very unexpected because when gold was here, I was expecting a retracement. When it was consolidating, I was expecting it to make a retracement, tag me in, and continue buying. But this really happened very quickly, and it was unexpected, right? And it fell back down very quickly. So we could continue seeing this retracement. Forget about this London session. We can continue seeing that retracement as if it never happened, but it did happen, all right? But we can view price as this is an unexpected occurrence and then work with this. However, come to work with this because this was unexpected. So now, if that's the case, I would want to see buys continue from here. But gold moves very differently from every other pair. It does not correlate with DXY. DXY can be falling, gold will be falling as well. But when DXY falls, GBPUSD buys, EURUSD buys, USDJPY falls. But in gold, DXY may be falling, gold will be falling. DXY may be buying, gold will be falling. Gold just moves differently. Alright. In recent weeks, I was waiting for price to sweep these lows and continue buying. We didn't have that. Instead, what did we have? We have a new bullish fair value gap formations. Good. I moved on from waiting for a liquidity sweep here. Can that still happen? Yeah, it can also very much happen. But right now, what I'll be looking for is for price to use this range. This range is unused with my system. I want to see me take a loss on this trade or take a win, or price creates new bullish fair value gaps that I can follow. But I'm not interested in this. I'm working with this right now. Here's my Fibonacci drawn from the last candle here to the third candle. I'm using the full range this time around because of the signature available on the 1 hour time frame. Now, what signature do we have here? There is an unmitigated or an unfilled fair value gap on the 1 hour time frame. All right, so I'm taking the entrance of the fair value gap. When price tags into it, this is the first candle area of sensitivity. It will tag that too, and this is basically where price has no more reason to keep selling. I want to see an immediate rejection from here, and if price does not do that, we could see bearishness continue on gold and maybe see a low sweep here, and gold can then maybe sell off all the way here, continue its direction going bullish. It can either do that or it can just create new bullish fair value gaps to the upside that I would then look to follow. That's that about that. I think in about 40 minutes I've been able to cover 1, 2, 3, 4, 5, 6, 7 currency pairs that I'll be looking forward to engaging with this week and into the future. And I hope I've provided you some insights to how I trade. When you keep seeing me make this analysis consistently, you will come to view the market from the angle I'm viewing it, and you really need to believe in what you are doing. Test your system, say it work, and then consistently replicate the same thing for you to have that profound belief in your system. All right, and that'll be all for the weekend, and that'll be all for the new week as well. I'm still trading my prop firm, my forex, funding pips prop firm. I'm in kinda a drawdown right now, but I'll be getting out of it with this US30 trade. I'm out of it already anyway. I just need this candle to close above here and hit my take profit, and then I'll be out of drawdown and looking to make more looking to make more profit. Actually, that order was caused by me trying a new system, testing a few strategies that I was testing, because that's one thing about learning. You have to test new things, understand new things. All right, this is my strategy, but I'm looking to create a strategy that has a very high win rate but with very little risk to reward, about 1 to 2, 1 to 3. But I'm looking for a win rate of about 70 to 80%, because in the year 2026 I'll be starting a 20 pips challenge. That 20 pips challenge is going to span throughout 2026. All right, I'm just going to share what that 20 pips challenge is. That 20 pips challenge is basically you starting with $20 right here and you ending with about $50. Yes, about $50. This doesn't entirely show the ending price. This is it right here, $52. All right, yes, it's it's possible. It's very possible. Start with $20, you end with $52,400 following the 20 pips system. But you need a strategy with a high win rate that you believe in, but low risk to reward. 1 to 1, 1 to 2. But whenever it shows up, it works, right? And that is what I am looking to create. I'm almost there, and once that happens, I'm going to start a new series called the 20 pip challenge. Right now, whatever I talk about now is under my playlist called The Journey. So yeah, that's the journey. This is the journey actually, and next I'll be starting the 20 pips challenge. So whoever wants to hop with me, feel free to hop with me. I'll be sharing all the trades I've taken and all the insights that I have to give. So this is it for the day and probably the week. If I have any other updates to give to you guys or to put out here, I definitely will put it out. So once more, this is me making a video to update my timeline as a means of journaling my trades and proof of concept to show that my strategy works and I know what I'm doing. All right, perfect. Thank you.